to look at connecting dots rather than developing new dots. The best way to do that, in my eyes, is to use a multi-lens approach, to triangulate around thoughts. So what I'm going to suggest is the 5 lenses I use in my book are these 5 lenses: micro, macro, psychology, politics, and sort of a biological framework. Why 5? Because my publisher told me 5. They like round numbers. There's 5 case studies. Why 5 case studies? Again, the publisher told me 5. In my class, I teach multiple more. I mean, the more the merrier in terms of lenses or cases. There's lots to be learned here. But let me just quickly go through these. So lens 1, microeconomics. What am I talking about? I'm talking about prices. I'm talking about when supply and demand curves intersect, you usually generate a price. If prices rise, you incentivize supply. If prices fall, you incentivize demand. Both of those pressures lead to prices tending towards an equilibrium. What if that's not true? What if higher prices result in more demand, resulting in higher prices, resulting in more demand in this self-fulfilling reflexive dynamic? Well, my argument is you've got a bubble dynamic on your hands. So that's lens 1. Lens 2, macroeconomics, I'm looking for sort of signs of misallocated capital, signs of malinvestment. And I'll get into that. Lens 3, psychology. Here we're talking about this time it's different, hubris, new era thinking, that type of philosophy. And then politics is moral hazard, when governments distort things. I just want to go through and just quickly describe it. I'll illustrate it, so it'll be more real here in a second. And then biology and herd behavior. Usually when we see mass participation of amateur investors in a class of, or an asset class that has historically been domineered by professional investors, that's not a good sign. And again, I'll show you through some examples. So here's what I'm going to do today. Now that I've sort of gave you the overview of these sort of the 5 lenses that I think are appropriate for thinking about bubbles through, I'm going to apply those 5 lenses to China. I still believe the whole Chinese investment growth, the Chinese growth rate and the sustainability thereof is a critically important issue for global investors. And I'll illustrate why I think so. I think it's highly related to lots of global dynamics in commodity markets, interest rate markets, currency markets, etc. So I think that's a really important dynamic to pay attention to, and so we're going to apply this framework there. Then I'm going to sort of show you a couple of other really fun multi-lens indicators to sort of lighten this up and be less academic about it. And then we'll look at sort of what does this all mean?